Of course, the theme of the week has been big tech earnings rolling out. We have seen results from Facebook, Apple, Alphabet, and Netflix out so far. Amazon set to report its results tonight. And joining us now to discuss is Barbara Ann Bernard, CEO and CIO at Wincrest Capital. Barbara Ann, thanks so much for jumping on this morning. Let's start with how you are thinking about each of the FANGs, because you note to us that they are different, even though they tend to trade as a group. We think of them as monolithic. Let's just start with kind of how to think about Facebook and Alphabet, given their role in the ad markets and what they've told us over the last couple of days.
Absolutely. So you can't paint all the FANGs with one brush. Facebook's talking about decelerating growth and Google's talking about accelerating growth. The FANGs all had a great year last year, and I think a lot of people thought maybe this year was going to be all about the reopening trade. And actually what we've seen is the reopening trade has been inconsistent, whether it's by geography or by sector. So by geography, you have the jabs and jabs nots, and by sector, some of the companies in the reopening trade are overpriced because we're not opening as quickly. And so unexpectedly, actually, tech continues to chug along because of how behavior was changed during that pandemic, right? And so during the pandemic, we changed behavior to buy online, which brought forward adoption. So better tech, better data engagement is leading to better ad pricing and better targeting. And this is, of course, very good for these companies. However, I think Facebook is my least favorite of them all because you don't use Facebook to shop online. And to me, that's the more sustainable trend. Online advertisement is the new rent. And so of the FANGs that we want to discuss, I have a preference for Apple and Amazon, actually, not only because of valuation, but because of the sustainability of the shopping trends that I foresee.
Barbara Ann, it's Julie here. And I guess we were talking about the Metaverse earlier. I guess we're talking in the Metaverse right now. I don't know. What about, though, the sort of potential? I mean, Instagram has done some sort of shopping through in-app shopping, that kind of thing. What do you think the potential is there? Do you think that other places are just doing it better at this point and that it's not enough of a reason to buy Facebook here?
Yeah, and so companies get penalized when they talk about growth and you don't know when you're going to be able to value those cash flows. And I think that's what's happening with Facebook. The Metaverse, of course, is conceptually very interesting, but he's unable to articulate when and how to monetize it. Whereas someone like Amazon, for example, I think is going to reshape consumer behavior and expectations. The 2-hour same-day shipping is the new 2-day. And they have such a first mover advantage there. They're uniquely positioned to win that market. And if you think about grocery, household goods, prescriptions, and alcohol, that's a $1.7 trillion market in the US. And it's 65% of the remaining offline expenditure. And that is what's going to drive 40% of future US e-commerce growth. And I think Amazon is so uniquely positioned to win on that one. And the path is clear. Whereas with something like the Metaverse, it's just a little more uncertain.
It's perfectly clear, Barbara. I don't know what you're talking about.
Well, let's stay on the Metaverse. So it sounds like what you're saying, Mark Zuckerberg, he might pitch in on earnings calls. That's what he appears he wants to do. It doesn't sound like it's an investable concept yet.
No, and also, I mean, they also talk about AR goggles, right? And hardware is just an inferior product than software. And so part of what's neat about the Amazon story now is they have this recurring revenue in terms of Amazon Prime, and you have the cloud adoption and inflection point, and then you have advertising growth, which is pretty sticky, and that's going to drive further growth and profitability. And those things are all higher margin than selling hardware.
Let's move on to Amazon, which of course is out after the close of trading, and obviously it's directly a shopping place. How do you think it's going to evolve, though, as we do come out of the pandemic? As you said, we sort of have this stop and start reopening at this point, but what's your outlook there?
I think it continues to chug along and take market share. Consumer behavior is not going back. And you look at Mastercard this morning, they said their card use was up 36% year on year. That's just a fundamental behavioral shift. I mean, sure, people are spending more this year, but they're spending it more online and using their credit card to do so. During any recession, one of the first things companies cut is their ad spend. And so, yes, these companies have relatively easy comps because you're comping, Q2 of last year when people had very little visibility on their business. But as companies have greater visibility and are upping their ad budgets again, it's incrementally going online. And these guys just have such a moat, and the moat keeps getting bigger. So ironically, the strength of these businesses is also their weakness, because as we all know, big tech gets cracked down on places like China, and China doing that makes it a little easier for the U.S. to maybe say, hang on, let's look at some of these market shares. If you look at Google, they have over 90% market share in search. That's pretty monopolistic. So that's the risk. And on the other hand, these companies have so much cash that every time they get fined, they just pay it.
Yeah, the cost of doing business of sorts. We'll figure out where exactly. We'll create a new line on the income statement for fines because, So we'll work on that going forward. Barbara Ann Bernard, CEO and CIO at Wincrest Capital. Barbara Ann, thanks so much for your time this morning.